Hey everybody, welcome back to Precious Metals Mania. I'm Jason Gwynn.
And I'm Colby Parr.
Hey, welcome back, guys. We got a special guest tonight, as we promised. Tonight's topic is going to be investing in commodities. First, want to say, always say, I'm not a financial advisor. This is just some of these things we do, like the wealthy. But I want to go ahead and bring on my good friend from Canada, Mr. Lucas. Mr. Lucas, you there?
Yes, I am. It's nice talking to you guys.
Awesome. Glad to have you
So we're
on.
gonna have a lot of time. It's excellent. I'm happy to talk to you guys, and hope everybody's doing well. Hope you're doing well, Jason. Hope you're doing well, Colby.
Thank you, man.
And I suppose a good time. Do you have any questions in particular? Do you want me to talk about in general before we start, or you just go freestyle and go from there?
We're recording, so yeah.
Yeah, no problem. We'll get started then.
Yeah, absolutely.
All right. So, well, something I like to talk about is mistakes that people do when they start investing, and mistakes I've done when I started investing. And I like to start with when I first started. So, I've started off with reading one of those popular books, and I'm sure everybody's read that book, Rich Dad Poor Dad by Robert Kiyosaki. I'm sure you've read it, Colby. I'm sure you've read it, Jason. Right? You've heard about it at least. Very popular book. And
yeah, I got one.
It's
right
like
here.
the introduction. Yeah, that's an excellent book
Yeah.
by Robert Kiyosaki. Love it. Excellent book. It really touches base on cryptocurrency and precious metals, understanding that what assets are real and fake, which is amazing. And he knows how to explain a subject that's very complex into a very simple concept. So something that usually people would look at and be like, "Whoa, this is complicated. I don't want to listen to it because it's really complicated." Well, Robert Kiyosaki knows how to take something complicated and make it very simple. Somebody that's very worth listening to and following is definitely Robert Kiyosaki. Great author, love him. And he doesn't give financial advice, but he gives his insight on when he thinks towards certain things. Like he's a big precious metal guy and is a big crypto guy. He just got into crypto, still learning about it, but it's definitely something that it's worth listening to. He's affiliated with a lot of great successful people. So like somebody I follow that works with Robert Kiyosaki is Mike Maloney. And he's very big in precious metals. I believe I've talked to him about talked to you about Mike Maloney, correct, Jason?
Oh yeah, multiple.
So
yeah, multiple times.
he does an excellent channel. He does an excellent channel called Hidden Secrets of Money. He talks about like everything you need to know about the precious metals market that's connected to the commodity market. But before we do jump into the subject of commodities, so people, I know that you guys are really big on precious metals, and so am I. I love precious metals. It's an investment. Well, sorry, it's not an investment. It's an insurance that's that you can have confidence on. Something you can purchase and sleep and still sleep at night when you buy it, and not have to worry about going having that asset to go to like a value of near to $0. And that's something that I love about precious metals. But before we do jump more further into details about precious metals and all that, uh, let's start with when I first started investing, my first mistakes, and build up from there.
Yeah.
So when I first started investing into the market, I read some books about stocks and all that. Everybody that reads a few books before or watch a few YouTube videos regarding the stock market and all that. Because when people get into the stock market, they're like all excited, it's like I make a lot of money. Well, it doesn't work that way. Stock markets, well, if you know what you're doing, you're gonna be able to make profit with the stock market. But it depends on the knowledge you get, and it depends on your strategy. And when I was researching about the stock market, I realized that market wasn't for me for multiple reasons. We're not going to go in details on it because I'm not a big stock market guy. Like I have confidence that the S&P 500 is a good was a good market for me if I would have invested in it back in 2008. Well, sorry, 2009, 2010 after the correction of the
Yep.
2008 crash. But we're not going to go in details on that. But it's a like or the Nasdaq or any great stocks like Amazon, Apple, etc. Right? But one mistakes that I've done when I got into the stock market is I was trying to find stock. I was looking on trends on YouTube or any like anything on Google, do some research. It's like some guys were saying, "Oh, this is a great stock." So I was like, "Okay, do a little bit of research, go into it. Okay, that looks decent. It's really low price and all that. I'm gonna buy into it." Next thing you know, you see that stock. It's a new company. It starts, and next thing you know, because it's a new company, they usually overvalue that company, and then they decrease the value. Sometimes sorry, not decrease the value, but the value is gonna go really low because they do a correction or sometimes it's just very volatile for nothing, and then you end up losing money in the process. So your stock just doesn't move, and you end up doing a lot of mistakes. And that's a lot of the mistakes that I've learned when I got into the market is I bought a lot of penny stocks and stuff like that that didn't really work out. So some of them I did some profit, some of them I lost money on, and at the end I either came close to being equal or had a few losses. So it wasn't really a good idea for me to go into the market when it was for individual stock. But looking into the stock market and all that, I found that things like the S&P 500, the Nasdaq, or anything that's like uh, sorry, it's like a bundle of multiple stocks together, like not a mutual fund, but a index fund that has like a bundle, and then you can buy multiple companies in one. And usually that goes with the market in general. So it usually goes up with the trend. So if you're ever curious, you want to see a good index fund, is the S&P 500 is one I like to follow, or the Nasdaq, or anything that follows those trends in particular. But one thing that I find that helped me a lot understanding the market much better is understand the economic trends. I'm not sure if you guys ever followed the economic trends regarding the spring, the summer, the fall, and the winter of investing. You guys ever heard of those specific trends? Every 10 years there's a recession and all that.
Yeah, a little bit,
Yep,
We hear about the
very
reset
good.
coming, and all that. So
What's that?
I said, yeah, we know about the resets they have every so often, but as far as the trends, we just catch them here and there. I'm not much into the markets myself as far as stocks, but I keep up with it because we're into metals. So as far as markets and stocks, that's not me. I don't pull that too much. So
Yeah, no, I'm not a big stock guy myself, but I just find that it's important to follow stocks
yeah,
because that way it gives me like a guideline to follow on. So if you
oh
see
yeah,
the stock price, you see gold prices, you see silver prices, you see prices of everything, and then you see a certain movement, then it gives you an idea on other things on what's
yep,
going to happen. So I use it like a way to calculate the markets and all that. That's my way of looking at things, and it gives me a good insight on everything that's going on in the world as well. Because if you see like I'll give you an example in March, you notice a big downfall in the S&P 500, but not long after they decide to shut down the economy. So it gives you an insight, like something dramatic happens, and then he's like, okay, there's shutdowns everywhere. Okay, so it gives you an insight on things that are going to happen. But something that I find that's very important about understanding the economic cycles, like the fall and the spring, the summer, the fall and the winter of investing, is that every 10 years or so, or sometimes around that period of time, you'll notice that there's always some sort of a recession. So interest rates go down, and then there's a correction, and interest rates go up. So then the borrowing goes slows down significantly. So then you see a correction in the markets, and then the prices normalize. So then people that bought in the top into markets and all that, they usually end up losing a lot of profit. Similarly to the real estate market, when people bought into the real estate market at a very late time. So when the market corrected, a lot of people would lost a lot of their money into the housing market. So a lot of people would end up going bankrupt just to get away of that debt that they created for that house that was overvalued. And a lot of things like that can touches the market, touches the housing market, touches just about everything. And one commodity that did very well during that time, well, sorry, two, or most commodities anyways, was gold, silver, even not long after palladium did well in 2014. So precious metals really did good not long after the 2008 crisis. And even before, previous to the 2008 crisis, since the year 2000, you noticed that gold was rushing up. And then after the 2008 crisis, silver went up to almost $50. And people then, well, was like, they thought that we were heading towards hyperinflation because of QE2. And then what happened is people thought, okay, we're going to head into a hyperinflation. Something's going to happen because they're printing a bunch of money. But what happened is the money wasn't going to Main Street, was going into the stock market. So then people will start to, alleviate that fear, and then they start to sell off those metals. And that's why the price of silver went back down to roughly $15 or so. But a lot of people end up keeping those metals in a lot of, well, and also there's a lot of notes that were created as well, creating a lot of, still creating a lot of volume into that market. So the price was always stagnating between 14 to like $19, sometimes almost 20 for the next 10 years. So something that was kind of nice for precious metals dealers, buyers. They got a nice good stretch to buy metals for a good price, even though the price went up. Well, they still normalized and stayed around the normal price for a little while, which is nice. So that's so when I got into the precious metal market, it was around 2008. I was able to, sorry, not 2008, 2018. I was able to get a lot of metals at the lowest price, which was great, like around the $14 price for silver, and then around the $1,300 price for gold, which was an excellent price. But before I do get into more details into the gold market, I want to talk about, like, it's important to also not just put all your eggs in one basket, because diversifying can be a good strategy for a lot of things. Like it's good to own gold, it's good to own silver, it's good to own platinum, palladium. It's good to own, like, if you're interested into like other commodities like the food market, or you're interested into the other metals, or like anything in particular into the commodity market is good. But if you also want to diversify into the stock market, it might have opportunity when there's a correction, when prices normalize again. There's always a good deal that can come if the prices are good, if the price is right, if it's not overvalued. And then if we wanted to jump to the next phase, so there's a lot of people that don't understand the markets, and they go into the mutual fund section. I don't know if you guys ever bought into mutual funds or anything like that.
I haven't.
Nah,
No.
no.
Okay, that's like some people do like the idea of having mutual funds. I personally don't like the idea of mutual funds, especially the fact that you don't really control the asset. You're pretty much putting your financial wealth, your financial health into somebody else's hand, which most of the time the mutual fund advisors are not really advisors. They're more like salespeople. They just sell you the asset and be like, here you go. Just like the market's gonna go up, it's going great. Look at that uptrend. That's gonna be your money next few years. But they don't really. When I went to see a mutual fund dealer, just to have an idea, sorry, not dealer, but in one of my local banks, I was talking to him and he was giving me an insight on the market, and all he showed me was that uptrend, but he never showed me anything before 2008. So he was hiding the fall of the market So he only showed me the uptrend, but he hid everything else from me. So you can tell, like the guy's like, yeah, there's gonna be an increase and all that, and you're gonna get some dividend, and you can go into a high risk, a medium risk, or a low risk, and then he says there's gonna be a few fees. They're not gonna be too high, and at the end of our meeting, he said, but the profit is not guaranteed. And that's the one catch, is
Yeah.
it's not guaranteed, because there's somebody who's pretty much trading and doing all that fun stuff with your money. And I don't know, would you really want to trust some guy that you never met with your money? I mean, the only person that should be able to take care of your financial wealth should be yourself. You should be the only person who should trust, in your financial decision. If you make bad financial decision, then that's
On
that,
you.
that's your mistake. You're pretty much the one, you're telling yourself like, okay, I did that mistake. It's my fault. But if somebody else loses all your money, then it's just a financial disaster at that point. And that's a big thing that happened during the market crash in 2008 as well. A lot of people lost a lot of money, and not just that, a lot of people leveraged into the market as well. They didn't know what they were doing, and they were told that market's going to go up, everything's going to go great. So a lot of people leverage money into the housing market for bonds and all that. So when that housing market went down, a lot of people lost a lot of their wealth, and a lot of people, like some of them were like life savings and stuff like that, because they thought the real estate market was the safest market ever. So in reality, no markets are safe. It's just some can be more of a better strategy than others, that I personally find. I'm not, like I said, I'm not giving any financial advice or anything like that. I'm just giving my personal insight of how I look at the market. And another thing about mutual funds and all that, they say the fees are low, but personally they're not. If you look at the fine print, you'll notice that the fees are actually very high. And most of the time, your growth plus the dividend you get at the end is next to nothing with all the fees you paid. So your profit is very low. So I want, honest, for me personally, I would say it's not worth it. For other people, they might say it's a great asset. It depends also on who you're dealing with, which is very important. So it's note that it's good that it's important that you have a good insight of the people you're dealing with, and you have a good information on the company, so that way you know where they put their money and what's their strategic the strategy in that with that fund itself. But now we're going to talk about the part of the market that I'm most comfortable with, is commodities. So I'm going to start with the commodities market for the gold and silver part. That when I first got started. So when I started educating myself in precious metals, I started off with the Hidden Secrets of Money by Mike Maloney. So Mike Maloney, as I mentioned earlier, has a great series that explains everything about the gold market, like from top to bottom, very well. I would not take everything that he says to heart. Take it like, you know, at the at your own, what your own beliefs. Like, don't, I wouldn't recommend somebody to take everything he says to heart. Like, just take a good the information. The history part is true. Everything, a lot of the things he says is true. He says a lot of things that silver is going to go to the moon, gold is going to go to the moon. I don't want to get too exaggerated with that. There's a possibility that it does go up. There's a possibility that there's a correction and the prices go down, and then it's going to go back up again, which is very likely, because during every time there's a correction, prices will go down for every asset, and then the precious metal will always go back up for a correction. If you look in history, especially 2008, if you look at all the metals. Anyways, if so, let's see here. And then after I've finished studying the precious metal dealer, the market, done a lot of personal research, and then I've read the book. Eventually, I came to the book Fake just to confirm everything, and then the book Fake explains a lot of great things that the one that Jason presented to us earlier by Robert Kiyosaki. Can you give me an insight of what do you think about that book, Jason? Just help the crowd understand better your point of view towards it.
Well, I'll be honest. When I got it, I've had it a good while, and it's a big, big, big book. I haven't got all the way through it, but just what I've read so far touches really a lot on what's going on right now in this world today, right now.
Mm-hmm.
And
just the views on what's going on in the world, were they positive or negative towards what's happening, like towards our financial market and all that?
oh, it was spot on. In my opinion, it was spot on.
It is. I find personally it was spot on because he explains that our market, he's comparing a lot of our market right now compared to like a mountain. Like, when you go and ski, if you ever went to a ski resort, and I'm a big snowboarder, so I love skiing. So I want to use that example about the market with the ski patrols and all that, which I've been doing ski patrol for years, so I understand exactly the concept. So what happens is the ski patrols go into the mountains, and they usually use dynamites, or they're gonna use something to break down the snow, so that way there's no avalanches when the big crowds and people go visit their ski hill.
Gotcha.
So what happened is that would be a good example of a recession. So whenever you explode the mountain and the snow will just normalize, then that's your recession. But what happened right now is instead of blowing up everything, they're just building gates around everything. So right now the gates are just getting bigger and bigger and bigger, and the snow is piling up, piling up, piling up instead of blowing everything up. So once the gates can't hold the snow anymore, the snow is just gonna spread out, and it's gonna be a bigger downfall. Instead of having a gradual downfall, they're just letting that snow pile up. And it's a great and I love the example that he uses. It's very well explained, and it's very precise. And it's not just Robert Kiyosaki that uses that example. It's Jane Rickards. And Jane Rickards, if you've read some of his books or listened to him several times, he uses a lot of great examples to explain what's the current market. And then Into the Road of Ruins, he explains that example. And then into Aftermath, he talks about how he's giving the example. Sorry, not the example. He's comparing our current world to like Godzilla. So Godzilla is a giant lizard. He's very
Yeah.
powerful, all that. But
Right.
in 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 theory, what happened is Godzilla, well, he isn't real. He's just a fictional monster. But if you took a whale, which is the biggest animal in the world, and it's almost impossible that there's an animal bigger than the whale, because what happens is its organs and its blood vessels and all that will limit the creature from going into a certain size. And he explains that if the animal would have got to the size of Godzilla, the animal would have been big but weak. Because an animal cannot get any bigger than a certain size. And once it reaches beyond that point, that's when the animal collapses. And that's why he's comparing the market to. Is he's saying the market is way too big for what it is. And then he gives more details on that the market and the economy and the governments are super big, but they're not strong. And that's where the current issue is going on. But I'm not going to go too far with that. I'm just giving an insight on what Jim Rickard says. And it's a great book. I love it. And if you read all his entire series, it gives a great insight towards the gold market. And he does love the precious metal market in general. fine art, and other assets affiliated to safe havens, and
Yeah,
also land.
I've actually caught some of his stuff on a website called kitco.com. So
Yeah,
I do follow
Kitco.
him too.
Yes, Kitco is an excellent website. And well, not, well, the website, you can follow the Kitco on Facebook as well, and they give a great insight of constant information on the gold market. So that way, you always have an idea if you're going, there's an uptrend and lower trend. So that way, it gives you an insight on the market before something does happen. So now a lot of people right now are saying that the gold market's going to go low to maybe the 1,750, maybe a little lower. Some people like Harry Dent say that the market is going to go to 1,400, and some people like James Rickards say that the market's going to go eventually. It's going to have to go down because during any correction, markets go down. People that are smart and buy in dollar average into the gold market are going to wait for a right time to buy when the market uh, corrects, because every time there's a correction, people who have leverage on the market usually will, when there's a correction, they have to sell off those assets, or they're forced to sell it off for a loss. So what happens, that market goes like to a massive correction. Sometimes it can go to 50%, sometimes just 30%, and then it corrects, goes back up, and sometimes it could go all the way to $10,000. Well, sorry, I'm not going to say that because that's what Jim Rickard says. He
Yeah.
says that he predicts that the market can go all the way to $10,000 for the gold market, and the silver market can go to even higher levels. But I mean, that's just what he says. You gotta listen to his information just to give you an idea,
Right.
because it's information. A lot of people will say it goes to 1,400, and a lot of people will say it's going to go to $10,000, and some people are going to say $5,000 in the next few years. So a lot of information are mix and match. So you got to take both sides of information, so that way you can create your own strategy towards that. So you
Right.
can be optimistic, you can be pessimistic, or you can put your sides on both sides of the coin, and then you'd be like, okay, maybe it's going to go 3,000, maybe it's going to go 4,000, maybe it's going to stay at 2,000. Who knows, right? It's hard to say because you can't predict the markets. And so now I'm going to go a little bit more on some of my mistakes I did into the market, the middle market, when I first started going into it. So once I got all the information I was satisfied with for the precious metal market, I I went into leveraging for into the precious metal market. So I leveraged into some gold position and a silver position. So leveraging into a silver position and a gold position, well, puts you into a vulnerable situation, because what happened is, if there's ever a correction, which I got into one when I leveraged into my position. So my position was a 1 to 3 position. I don't know if you guys ever did a 1 to 3 position into the silver gold market with
No.
it's something that's very popular within the stock market, the gold market, or anything like that. So what happened is, you're just going to pay a higher premium in order to leverage a position. So let's say I paid 33% of my position. So let's say I pay 333 ounces in order to have almost 1,000 ounces. So I pay 1/3 of the price, so that way I can have a larger position. So that way, if the market goes up, I make money. If the market goes down, I'm either forced to buy into the rest of the assets, or I'm forced to sell it off at a loss. But obviously, that's not something I would want to do, right? So when I got into the silver market, I said, okay, I'm going to just do a leverage position, so that way I get into the market right away, because I'm planning to buy that full position anyways. So I would do a 1 to 3 position. And then what happened is, everything was well. The market was going up to 19, 20, go down to 17, and back and so I was still profitable. But what happened is, when the COVID crisis came along, the silver market went down to $10 overnight. So it was at $19 one day and went all the way down to $10. That was an excellent buying time. By buying to the market at $14, and I could have saved $4 on that position. I could have been able to leverage into it and get an excellent deal. But by buying early into the market before there was a downfall, I ended up buying at 14. So then I got a loss. But I didn't sell. Then the company called me and said, Lucas, listen, you got two choices. You got either sell your position, or you gotta put some money into it so that way you can keep your position. Of course, I was into it for the long haul, so I paid off the rest of my position so that way I don't lose my metals. But a lot of people that don't have the money and leverage to that position, they're risking a lot of profit, and a lot of people do that. Let's say they're getting excited, the market's up. They're saying, all the economists and all that are saying the market's going to go up. The market's going to go up. People leverage a position because they're getting excited and they're buying extremely overvalued values. And what happens is when the downturn comes along, because they have a leverage position and they're super excited and they bought into the market by emotions and not by strategy, they end up losing fortunes. Some people will do a small leverage position of like, $5,000 or lower than that, which is a small loss. But some people who do positions of like tens of thousands of dollars or hundreds of thousands of dollars can lose, their shirts over this. So it's very important. That's one thing that I've learned from this. It's very important that doing any type of leveraging is, personally for me, I will never do it again. I find it's not the best idea. I find the best idea is just to get ready to buy when the buying price is right. Because when there's a correction, then you buy into a good price. Because economic cycles will always go up and down. You see a big uptrend, and then there's going to be a downtrend. You buy there, and then it goes back up. Then you can decide if you want to hold it or sell it. And that's usually when you decide that you a proper strategy into that market. That can go for anything, right? Precious metals, stocks, any commodities. A lot of people are very into futures for that reason. But anyways, I don't want to go too complex in that subject because I don't want to start giving people too much of big headaches regarding that asset strategy. But personally, I find that precious metals is a great investment for me personally for the long haul. But for a short-term trader, I would say don't. I would personally say not the greatest idea, especially if people are looking to buy into it right now for a short-term position. It's very likely gonna go. I personally think, I'm not saying it's gonna happen, but there's a possibility the market will go down in price when there's a correction, and there's always a correction. And let's see here. So now we're gonna finish up with my leverage position. So when I got into my leverage position, there's another thing that you have to consider. If you leverage into precious metals, which is not the best idea, you're gonna end up paying a percentage of interest. So that interest is a loss. That increases the amount of money you have to put into that position, and that interest rate is affected by the interest rate that the Feds create. So if interest rate for the Fed is 1%, then you pay 1%. If the interest rate goes up to 15%, then you have to pay 50% to keep that position. Then it becomes very unbearable. And usually when interest rates go up, at first, that's when the price of precious metals go down. So I'm not saying that's what will happen, but if you look in the past, that's what happened. But so, and not just that, you have to pay when you put your assets into a vault, into any, like most vaults, like through a TFSA account or 401k or anything like that uses the metal accounts. I don't do 401ks for me personally, but I'm not going to go there. And you say you're vaulting into a private. Let's say we decide to go private. Well, what happens is if you have a private vault, you have to pay a monthly fee for the amount of metals you have. Some will go by monthly just so you can have one size vault, or some are gonna go by the amount. So let's say they're gonna charge you a percentage of the value of the asset. So if the asset you have is worth, I don't know, the gold is at $2,000. Well, they're gonna charge you a percentage. Let's say probably 1% of $2,000 or more, and that usually can cost you more money in the long term, especially if you've been storing that precious metal in the vault for years. But it's a great, it can be a great idea to have money into a vault. I mean, precious metals into a vault, because what happens is if you're looking to liquidate right away and you have bills to pay, or there's something that happens and you want to liquidate right away, you can. So that's a great strategy to have money into a vault, or any types of services that allows you to store your precious metals, like with an online database or like a company. I just want to look with you, Jason. What are your thoughts towards storing your bullion with the provider online? Do you like? There's a company you've mentioned me there, and I was very interested into it because the prices are actually pretty good. I believe was it called 7K or something like that?
Yeah. Yeah. They've got some different options. You know, I haven't got into their vault quite yet, but I mainly just get everything shipped to me to my door. But I know
Yeah,
a lot of people
which
that,
is also,
yeah, I know I have a lot of people that actually use it. So it's definitely an option you can have with that company. Sure.
yeah, something
Absolutely.
that's great about storing your metals, I find, is that you have an insurance, so that way if something ever happens, that insurance covers you. But just something that's important to notice is that if ever something happens like confiscation or anything like that, you're not gonna get your metals back. You're gonna get paid back in currency. So that's one risk they usually take when you choose to store. But if you take it at home, then you're risking to get your assets to be stolen, or you can risk your people to break into your house, or put your family at risk because you have assets at your home that are valuable. And then another option that which is also popular is buying a vault, personal vault, like not with a bank, but like a personal storage companies that have low vaults, and you can buy them, and then you have like lower storage components, and then you just store them there, and you have your own little key codes and all that, so nobody can steal them. That's also a great option that I find for storing your metals if you don't want anybody to go at your house and break into it. So those are three great options. I'm sure there's many other out there, like overseas options and all that, because the options are incredible. Like a company I've dealt with was called PMI, and PMI is an international company that allows you to be able to ship your gold all over the world. If you ever decide to go to another country, your gold or silver can go to another country, which is nice. So if you decide to flee the country, well, you can have your metals shipped somewhere else, which is a great option.
Yeah.
So let's see here. So let's I don't want to take too much time if everybody here on the listening to us today. But I'm just
I
gonna
had a
confirm.
question for you, Lucas.
Go ahead.
Are you? Would you say you're a little more bullish? Like if somebody kind of just getting into this precious metal market or whatever, would you say you're a little more bullish on gold right now or silver? And also, do you the silver gold ratio, does that take any kind of part in your decisions? If you're going to invest into silver or gold.
The silver to gold ratio is been an important factor to calculate prices, just to make sure which one you should buy first. So if you say the silver is overvalued compared to the gold price, because the silver market usually, I believe goes to one for every 100 1 ounces. So 1 ounce of gold is equivalent to 100 ounces of silver, I believe, or near that number. That number can
Yeah,
change at times.
Yeah, it's closer to
Close to
80
that.
right now, but yeah.
80. Okay. So if it's a good, like if you notice that the silver price is just going really high, and you notice that gold prices are going down, but prices of silver are still fairly high because how can I say this? I find the best. I'm gonna say my. I'm usually happy when I see prices of gold and silver. If gold goes at $14, I'm excited and I usually buy into it more. Or around 14, 16, 18, decent buying prices. When it starts passing that, I become more hesitant into buying into the market. Gold, I'm more excited when it goes around, 14, 13, maybe even 1500 is fine. So yeah, 1500, 1300, good prices. But I feel that I'm more bullish towards the silver market long term,
Yeah, me too.
and because what happened is the silver market is a hedge against inflation, and what happened is that the inflation we're not going to see it right away. What happened is we're going to probably expect a deflation at some point because deflation is always the first step before inflation. So what happened is everybody's saving right now. Everybody's scared because everybody's scared, and fear will make people want to save their money because harder times are ahead. That's usually happens every several, during any type of economic recession or depression or anything like that. So whenever we head into a recession, people will want to save more because people are more scared of losing their jobs and all that. And a lot of people have lost their jobs. So people that do have jobs will save their money just in case they lose their job. So because people are saving, well, that creates people, to create a depression or recession. So because people are saving, prices will eventually go down, which is normal. We're already seeing a price downfall in the gold market. I'm not saying it's because of that, but if stimulus does slow down, prices of gold will go down. Very likely, if when the vaccine is starting to be handed out, price of gold will maybe go down. It's something that's been mentioned several times through the Kitco site, and Robert Kiyosaki has spoken about it. I believe that Jim Rickard has spoken about it as well. So a lot of economists everywhere are mentioning that the COVID-19 vaccine will maybe affect the prices of the market, but for the long haul, I I believe that the silver market and the will do very well. The gold market will do well in the long term as well. So it's a good position to hold. But like I said, this is just what I personally believe, doing my own research. I don't say to anybody to take what I say to heart. Take my information, do your own research, and then if what I say matches your research, then that can give you evidence that what I'm saying makes sense. Right now, I don't have any charts to present to you. I don't have any evidence, but if anybody has any question, they can ask me, and I'll definitely be more than happy to give them information regarding my personal views regarding the market. So let's see here. Do you have any other questions, Colby, before I keep going regarding how I feel regarding the markets for the silver and gold?
No, not. No, I think that's good. That covers it. Thank you.
Good to go.
Yeah, perfect. Perfect. So let's see here. So I'll talk about the correction, and so another thing that's important. We're not just gonna. It's not when it comes to having physical asset itself. I find it's not really the price that matters. Yes, it's exciting to have a low price in the metals when it goes down because you get a special. You're like, okay, this is great. I can buy more metals for less. A lot of people are gonna get pessimistic, be like, ah, no, I bought like a bunch of metals and now it went down in price, and then they're like all sad. But for me personally, when I see the price of metals going down, I get excited. Yeah, it means I'm getting a good deal. I can buy more, and that's what's more important when it comes to precious metal investing. Is it's not the price that matters, it's the amount you have. Because when it comes to inflation, the amount you have is more important than the price you bought it at. I don't know if that makes sense. What do you think, Colby? What do you think,
Yeah,
Jason?
I totally agree. I mean, a lot of people get, they see the market go down a little bit. They say, see, the market went down, you lost money. But to me, it's like, that's just a buying opportunity. That makes me happy. Like, oh, yay, I get to buy more, So,
Exactly. That's exactly what people should look at. And let's say if gold or silver ever goes super high, and then eventually there's like, you see the market correct, and you see, okay, this is going to be the long-term price, because the price is not going super low, it's not going super high, staying stagnant for quite some time. Then okay, this is a good time to start buying. And if you ever see a little bit of a downfall, then you buy more. It doesn't matter if price goes up. It doesn't matter if price goes down. You just buy more.
Yeah.
That's because you know that it's a hedge against inflation. So when inflation comes along, well, you get deals. Well, sorry, you get deals when deflation comes along. But when inflation comes along, well, your good deals usually pay off. But I mean, like I say, it's an insurance, right? It's a wealth insurance. You want to protect what you have. You don't want to you don't really want to buy into metals if you're trying to make a lot of profit. You just do it so you don't want to get your wealth stolen from you. Because, like I say, like me, let's say I want to buy a house. Been saving dollars, working constantly, but houses are going up in value like crazy. Can't even buy a house, so you're stuck renting houses or renting an apartment, wanting to buy into a house, or you got to leverage into it, which is super risky right now. I personally find. And then you're saving dollars and you're saving dollars and you're saving dollars and you're never able to buy that house. So you got to leverage into it. But that's a risk. If that market goes down, then you end up losing a lot of money. You either got to choose to keep that house and do the payments on an overvalued house, or go bankrupt. And most people you don't want to go bankrupt. So precious metals, I find, is a great way to save your money. And then when inflation comes along, then your money is still worth the same thing. And that's what I've done. I buy into the metals, and then I buy a position of $14, roughly, plus premium, of course. And then when inflation come along on Main Street, because of the care package money they give for like the stimulus package for the UBI that they give to everybody, well, that creates inflation, and that affects the price of not just precious metals, but almost every commodity. And eventually, you're going to see price of commodities going up, and it's normal, because when Main Street is affected, you'll see the price of food going up, you'll see the price of metals going up, you'll see the price of wood going up, you'll see the price of pretty much anything you gotta buy, stuff you don't need leverage for. So those things, then especially if your asset is very liquid, then you're able to sell that extremely liquid asset like precious metals, which is perfect for that, to buy the stuff you need when you need it. So if ever comes that your salary is not going up and your assets are going up, well, when it comes to selling to buy some stuff to survive, then your precious metals will do a good bet for it. But anyways, we're not going to go into too much details regarding that, but that's just my personal view. I'm not giving any financial advice. I'm just saying how I view the markets on my own eyes. And if you guys, like I said, like I always say, there's two sides of each coin. You take both information, so that way you can have an open view on everything. So that way I look at the pessimist and the optimistic view, and then I look right in the middle and I say, okay, some guy is saying it's going to $10,000. Another guy is going to $14,000. I mean, $1,400. Take both views, go in the middle, figure out from there. Or any investment in actually, or any information personally. Like if somebody goes to one extreme or the other, well, usually you end up getting lost and you go down the rabbit hole and then you don't find your way back. But that's just my personal view. So what do you guys think?
I think you covered a lot, man. I appreciate you hopping on tonight. if you about wrapped up or you finished, you got some more.
Yeah, definitely gonna finish up. I think I've touched pretty much a great amount of information regarding my thoughts towards the market and how I feel about the market, its commodity market itself, and the mistakes I've done and what I've learned throughout everything, and etc. and more.
Okay. All right. Well, look, man, we appreciate you hopping on tonight and sharing a lot of insightful information, especially, you know, how to leverage certain things and, you know, what to watch for, interest rates, especially, you know, mentioning another great person to follow and keep up with is Mike Maloney, Gym Records, which I follow too. Pick up the book, Hidden Secrets of Money, if you haven't, he mentioned. Also Rich Dad Poor Dad by Robert Kiyosaki and Fake.
I'll just have to correct you real quick, Jason. Sorry. So it's the book is not Hidden Secrets of Money. The YouTube channel is
Okay. Okay.
Mike Maloney. The
Okay.
Hidden Secrets of Money is just a story, and the book he wrote is called Investing in Gold and Silver, which is an excellent book. That is definitely a book that I would suggest anybody to read because it's excellent. Touches history, touches all the details, and it goes through like the mistakes people, like I mentioned, the leveraging and all that, the mistakes that going to leverage accounts will have high rates, high prices, high rates, and can cost you more in the long term.
All right, gotcha. Yeah, I was just taking a few notes down as you were speaking. But yeah, man, like I say, it's always great to talk to you, learn stuff from you. I know Colby probably learned some stuff tonight, especially
Absolutely.
learning, you know, probably first time hearing you speak. We're happy that you took the time out to hop on the channel tonight. And anytime you want to come back and talk, we're happy to have you anytime. But guys, be sure and like and subscribe to the channel. Like the video, share the video, and we're gonna wrap it up tonight. Again, Lucas from Canada, we appreciate you, man. As always, guys. See y'all next time.